Thanks for joining. Before we get started, please click subscribe to my channel and check out a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So it has been a good start to 2023 for investors. The market, I'm sure everyone's aware, did not do very well in 2022, but 2023 has been pretty good so far. Through February 10th is when we're recording this. The S&P 500 is up by 6.3% for the year, and that's after a little pullback. And the Nasdaq is still up by almost 13% for the year. And we're less than 6 weeks into the year. So Tyler Crowe's joining me, who's a little bit less of an optimist than I am on things like this. So I want to know, has something changed dramatically in the first 6 weeks of the year? Is it investor sentiment that is really not being driven by anything factual? Or what do you make of the market's move? Have we gone too far, too fast?
I know I always sound like the bear, but to me it's a very much I don't want to be overly committed to one side or the other right now. And I feel like there's all too often we speak in these binary terms like, oh, the market's gone too far, or no, there's a lot of room to run. There's so many working components within these markets. Like some markets could possibly do awesome. I think some may not be doing great right now. But to the specific, I think this is kind of getting at the overarching theme, which has basically been the Federal Reserve, right? This kind of been the sword of Damocles, I guess you could say, for the markets for quite some time now. And the idea of like, well, if they continue raising rates, the cost of capital goes up, it should slow things down, right? Well, it hasn't quite happened yet. The labor numbers are looking really good. We have seen some deflation, but again, it's throwing up mixed signals. And so there's, I think, some attitudes are saying, oh, well, they're slowing down federal interest, or the interest rates on federal funds. That means things are good, right? And we're going to pivot back. Maybe, but they're saying they're not going to, and they've been true to their word for a while now. So it's one of those things where it's like, I don't want to commit a lot of capital to something that is going to be a questionable decision in terms of like it's dependent upon a lower interest rate environment. And I'm not going to, pour into, gold or other hyper safe hedge inflation sort of things because they can't get a hold of it. To me, it's a pick your spots market. Like, you're not going to go in and just indiscriminately buy and not be valuation, sensitive. I'm going to look for deals. I'm going to look at individual companies that, may or may not be mispriced and really go from there to try to, read the mind of Jerome Powell and the collective psyche that is the market. I just don't know what to do.
Yeah. And I mean, on the topic of the market as a whole, I think the moves kind of make sense. We're seeing with the combination of the jobs numbers and the slowdown of inflation, which the Fed finally acknowledged, Jerome Powell finally acknowledged that inflation is slowing down. It looks like we are going to be able to avoid at least a deep recession, if not avoid a recession entirely. The fact that a lot of people didn't think the Fed would be able to start to get inflation under control without a massive hit to the job market. And we're starting to see now that they can. And it's still very early in the game. It's too early to declare victory. So I'm not saying that. But we're starting to see that things are going a little bit better than the market had feared. So I think the overall moves make sense. Now, when you look at some individual stocks, I wrote a piece the other day about how 3 of the real estate stocks I watch have more than doubled this year alone. Redfin, Open Door, and OfferPad are all up more than 100% from where they started the year. Things like that might be a knee-jerk reaction. There are a lot of growth stocks that are up, even not just those, because those were, beaten down and priced for bankruptcy. There are a lot of growth stocks that are up 30, 40, 50% or more this year alone. And those are the moves that I kind of take pause. Like this might just, a lot of them might be short squeezes, because a lot of them were very heavily shorted going into this year. And now that we're, the slightest hint of good news can push a heavily shorted stock up 50%. So I think a lot of it has to do with that. But as a whole, I think the market's moves make sense.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.